to Global Investor Radio. Most of these stocks are put together on the 29th, and I'm now recording this on the 2nd, and it's just coming up to 9 o'clock in the morning New York time. And these were some of the stocks that are left over from 2013. The market's seen some quite significant rises in most stocks, in most sectors, during the course of the last 2 or 3 years. Some of these stocks are lagging a little bit. Some of them have taken off from the positions of where they started and they're up a little bit, but I feel that they've got a lot more to offer in 2014, so I've titled this The Best of the Rest 2013. Starting off with RRST here, big downtrend being broken, nice head and shoulders developing here, and if you look where my mouse is here and here, I would use that as the pivotal point. If it drops below these points here, sell out and be patient. Don't hold on to see if it will come down all the way to 4. I've got a feeling it's going much higher from here, and I would say it's looking 70 to 75% in terms of the way I trade, and I have been buying positions during this consolidation here. If you draw a line along here, it looks to have broken up slightly from here, but I am still cautious, and I'm using these 2 pivotal points to minimize my risk in this particular trade. Look at this large volume bar coming in here, which is highly unusual. In the last 3 years, volume this large hasn't entered the market. So what's it telling us? We'll just have to wait and see. But I believe this volume spurt here is worth investigating a little further, and it's telling me, I believe, and I could be wrong, that this market is going to shoot up to around the $10 level pretty soon in the next 4 to 5 months. Ticker SWS, this is it on the monthly here. I've got a weekly chart just coming after this. You can see the downtrend here being broken, the base kicking off in 2011, a little bit of a false rise, people too early, base not long enough here where my mouse is. It comes back down for another period of base activity, nice little shakeout here, upward move, and then a nice boring consolidation here. And if you draw a very thin line along here, this little movement here where my mouse is up is signaling that the market perhaps is showing signs of a movement, and in anticipation of that I have been buying some of this stock for my portfolio. A lot of these stocks I've already talked about for the last 4 or 5 months, 6 months in the Oak Trader. A lot of the stocks recommended in the Oak Trader report are up 65 to 75 to 100%. There has been a few losses, but in comparison, in terms of the stocks that are up, please feel free, go ahead and check all the recommendations yourself. At least 82% of them are well in positive territory, and a lot of them are up over 50 to 75% over the last 5 or 7 months. And I feel that these stocks, as I mentioned at the beginning, have a very good chance early 2014 of really showing some momentum and taking off. And these are the stocks that if you're looking for a little bit of value and you're a bit of a bottom feeder and you hate the thought of buying in at a higher level, these stocks perhaps would appeal to you. And you can see this head and shoulders here, the drop down here, the shakeout, nice bit of action. That's where they pick up lots of stock, where people panic and sell out of the stock that they've got, especially after holding on for 2 years after a heavy downtrend like this. I expect the professionals picked up a lot of stock on this downward move here, third move down, and then it's moved up and it's consolidating. If you look where my mouse is, I would use these markers here at around the 550 level, 530 level as your pivotal points. Drops below that, hold a flat position. But I believe, if you draw a line like I showed you on the monthly chart just here, this little break up out of it could be the signal. You've got a nice bit of base action supporting the theory that this market will move up. Now, if this had only, say, a year's worth of base action and it spiked up, I wouldn't be confident in it at all. Whereas now it's starting to break up, I have a little bit more confidence. But again, it could muck around as some of these stocks do, but it is looking like it could easily rise to the $7 to $8 level in the next 3 months or so. Ticker PRIS, fairly new issue here. Big downward move, started off quite positive for those early IPOers, buying in at 6 and moving up to 13. I'm sure that they were very happy with their initial purchases, and then all of a sudden the market collapsed. We see this all too often in this market that we're living through at the moment, because a lot of the stocks that come into market are fully valued already because of this new rule where I think you can have up to 2,000 private investors now in a run-of-the-mill corporation in America. So with that being the law now, and I think it used to be about 50, companies that are doing well privately don't have to list on the market as they once did so early on. So you're seeing a lot of companies come into the market where the value's really been rinsed out of them, and they have a good shakeout, and we're seeing that with a lot of stocks. Even Facebook, when it came to market, had a big downward move and a nice curve action to move higher, and I believe this will follow the same pattern similar to Facebook. But again, price action has to confirm that for me, and I'm just waiting for it to break out again above this pivotal point here to signify that this technical position has truly changed. But it's looking extremely positive here, and because this is a new issue, I'm not fully bought into the fact about seeing a 3 or 4 year accumulation base. I don't need to see that longer accumulation on a new issue. I'm usually happy with about 9 months to a year. That's usually a good standard for a new issue in terms of accumulating after it's listed. So here, this is a pretty positive accumulation action, and I would suspect in the next 6 months to a year we're easily going to see this market up around the $4 to $5 level. Ticker symbol CIDM. I've got a I think it's a weekly or a monthly chart after this. Just wanted to show you the daily, the tremendous action here on the daily. Very tight 10-cent range here on the chart, and you can see if you draw a line here, breaking out above the 160-cent level, moving up nicely, consolidation, and if you draw a line along here, once it breaks this consolidation on the upside, I'll be going long for my portfolio even more of this particular stock, and this looks good to go even further, and I'd be looking for this easily to hit the $3 mark in the next couple of months or so. And this is it on the monthly, and you can see it's had a fair bit of base action behind it, only $1 parameter on the chart, big downtrend here, and then you see here with the uptrend, gradual uptrend being broken, really negging people out, nice downtrend here, up again, down again, really frustrating people. That's what we like to see during a base action, and it's a multi-year base action as well. Draw a line along the top where my mouse is here, and you come down. This is the point I believe that the market's turned. The triangle here, not a flat top, but a triangle nonetheless, and it's broken up out of that. You've got nice volume spurts here. It could muck around at this level, but I could easily see this stock in the next 6 months to a year, sometime in that time frame, at least approaching 3 or 4, and maybe over the longer term seeing it up around $7 or $8 for sure, simply because of this volume spurt here. They're going to have to distribute at a higher level. Of course, there is always the small percentage chance that the professionals won't play off their move. Just like professional casino cheats, they've got a high percentage of winning bets, but they don't win everything. And that's why you always have to be a little bit cautious and watch what happens in terms of price action. But this particular stock is looking extremely positive. VG, Vonage Holdings, recommended this about, I think it was about 4, maybe even 6 or 7 months ago. And it's been a bit of a laggard in terms of a gradual uptrend. It hasn't really gone parabolic or sustained a good uptrend, and it's gone sideways for the last 5 or 6 months, but everything's still looking pretty positive in terms of the long-term future, going off the price action, not off the fundamentals or anything that's being read in the newspapers or on the internet. So I believe, sometime in the next year or two we're going to see a lot higher price for Vonage Holdings. When, I'm not sure, but it's still looking pretty good here, and I haven't seen any signs of distribution here in terms of price action, so I'm still confident in my position, and I'm holding that for my portfolio for 2014. NTT here, pivotal point here at 15. Again here, tried to touch it, didn't. Touching it here, no, didn't touch it there, and it's gradually moved up. This is a pretty strong base action here. Semi-tight parameters, not great here, $5, but it's still pretty good. You draw a line along the top of this pivotal point here, down, and it's almost a pivotal point in terms of the technical position changing from a sideways, dullish market to an uptrend. And I believe this is one to watch in the next 2 or 3 months to develop some sort of uptrend once the market defines its trend a little bit more. But if you draw a line here, you can see triangles all over this, longer term triangles. You can see false resistance levels, and you can see consolidation actions and tight ranges as well. So I'm pretty positive about this company for the future. CBB, Cincinnati Bell, draw a long line here from the top of the pivotal point all the way down. This action here broke it. This longer term gradual downtrend, it's already broken the big downtrend here with the base action going sideways. Big multi-year bottoms here, pivotal points. You've had a lot of downtrends being broken, gradual downtrends being broken, and really what I would do here is a line from here, draw it all the way down, and it's just about where it is now. Once it breaks up out of that, over the $4 level, that'll be the signal for me to buy some more in this particular stock and to feel much more confident about its long-term viability in terms of sustaining an uptrend to at least the $6 to $8 level. But this stock's looking pretty positive, and it's a good multi-year base action. Ticker IPAS. You can see here the downtrend, very tight chart here, 10 cents. And once it breaks that line roughly at around the 175 level, I think that'll be the sign that the technical position has changed on this chart, and we'll see this particular stock move higher. But this is a good example about being patient and waiting. What's the point of buying here? You know, if you can get in at 160 compared to getting in at say 180 or 190, you lose 20-30 cents, but you're much surer in your position. You know, here it's kind of weak, we don't know if it's going down a bit further. Why take the chance? You know, let the technical position of the market change gradually. Be patient, you know, draw a line along it. What does that prove, that silly little line? That silly little line just proves that the technical position, the buying, is overcoming the selling. And sometimes we need to keep it simple. We don't need to overcomplicate how we make decisions in the market. And here it is on the longer term. You've got a fantastic base action here, downtrend being broken. It's a $2 parameter, it's a tight chart, and you can see this base action here, just waiting for that time. You know, if we picture that daily chart back in our mind, this is where it is here. Where my mouse is, you draw a line along there. Basically, once it breaks that line, I believe that will be the signal for this to have a good chance to have a sustaining uptrend in the market and move to around the $4 level. And if you look here, this gradual downtrend was broken here, and it's stayed steady and it's dropping off a bit, and perhaps they haven't accumulated what they need to. But again here, if you look at this action, I would say that this is spot on professional buying in the market, and I would be very, very confident about this particular stock in the future moving much higher from here to around the $4 to $6 level. But again, as I said about 10 minutes ago, you know, nothing in life is for certain, and even professional traders or groups or organisations fail in what they're trying to do. So you've always got to look at this from the standpoint of not really betting the farm. You know, it's always a good joke betting the farm, and sometimes we do feel like doing it, and this is one particular stock where in hindsight, in a couple of years, it probably would have been wise to bet the farm, but it never is, because there's always the unforeseen. Always expect the unexpected, and that will keep you trading for a long time. But this is certainly developing into a very nice base action here. EFUT, again here on the monthly, big downtrend being broken, another downtrend being broken here, and then the consolidation dipping down to a lower base action down here, then a slightly lower one here, and then we can see the base action changing and moving up slightly higher, and we can see that this gradual downtrend has been broken by this action here. Again, it could fall off like the chart before, but normally, 65 to 70% that once that's happened, especially with quite a new issue like EFUT, we should see this market move up to the $6 to $7 level quite easily, and I would suspect sometime in the next few years that we'll see this market up around the $10 level. But again, if you draw a line here and draw it down, don't jump the gun, wait for these price action trends to break, and once they have broken, then you can take the longer position. So once you've identified something that you feel is being accumulated by professionals, then look out in terms of the short term. What's the best position short term really to take the position, and just about here, once it breaks this move, that will be a good time to take a position. Why take a position and try and anticipate? I always do as a trader. It's very hard not to anticipate and control your emotions, but we all know good common sense. It's always better to wait till the balance is in your favour and not anticipate and try and take advantage of the market once you can see that the trend has clearly changed, especially if it's in a longer term base action and you can see it on a shorter term 6-month level trending slightly downwards. It's very powerful when those trends are broken, and they're very good points to buy into. PRLS, quite tight parameters here, $2 parameters. You've got a gradual uptrend here being broken. It took from 2009 to 2012 to go up 100% in price. To some people, that's extremely boring. They're not interested in those sorts of statistics, and it's really not enough to get a following in terms of getting the speculators behind you. And we haven't seen any parabolic spikes. We've seen nice curve action, base action here. So I would summarise that this is a consolidation action, and it's just a stepping stone for this market to move up to around the $6 to $8 level over the next year. This looks to be quite positive over the long term. You've got the downtrend being broken here, and then again I'd wait for the signal here for this downtrend to be broken. Once it breaks it on the monthly or the weekly chart, that'll be another signal for me to go long within my portfolio for PRLS. Okay, that's it for now. I'll be uploading another video tomorrow. Hope you all have had good holidays, and I'll speak to you soon. Take care.